Hello everyone and welcome to another episode of Ask NDB Wealth month-end market update for the month of September. I am Chamal Karnathan and this is Kavin Abeysekara, who will be starting off with GDP and the macroeconomic outlook. Over to you, Kavin.
Thank you, Chamalka. So the GDP numbers for the second quarter of 2023 were released in September, which showed a negative 3.1% year-on-year contraction, mainly driven by industry and service sectors, which contracted by 11.5% and 0.8% respectively. However, the agriculture sector grew by 3.6%, which could possibly be due to the improved availability of artificial fertilizer, which was previously under import restrictions. The Sri Lankan rupee depreciated marginally by 0.55% month on month, closing at 324 rupees to the dollar. However, the Sri Lankan rupee remained a net gainer of 11.92% year to date. With the recovery of tourist arrivals, Sri Lanka welcomed its 1 million tourists for the year on 26 September, with earnings from tourism growing by 56.7% to $1.3 billion. Further, worker remittances gained by 85.7% to $3.9 billion for the first 8 months. Gross official reserves for August were at $3.6 billion and the Central Bank of Sri Lanka was a net buyer of foreign exchange. Equity markets remained lackluster towards the end of the month until the DDO proposal was finalized. The ASPI and the more liquid S&P SL20 index gained by 1.99% and 2.13% month on month, while the year-to-date returns remained positive at 33.52% and 21.33%. Average daily turnovers for September were at 1.4 billion, which declined significantly compared to 3.3 billion in the previous month, and net foreign inflows were at negative 76.32 million. Furthermore, the Colombo Stock Exchange is set to announce regulated short selling through stock borrowing and lending, allowing investors to capitalize on market trends and the prevailing interest rates for a predetermined period. Securities eligible for regulated short selling will be evaluated quarterly by the Colombo Stock Exchange. Over to you, Chamalka, to speak about the fixed income market.
Thank you, Kavin. So, for the month of September, the final 2 stages of domestic debt restructuring came to an end. So, on the 12th of September, the second stage, which included 84% of the superannuation funds holding bonds, agreed to extend their maturities. Furthermore, the T-bills held by the central bank were also restructured and they were converted into 10 step-down fixed coupon treasury bonds as well as 12 treasury bills. During the treasury bill auction, we saw the 3-month, 6-month and the 1-year T-bill rates settled at 17.42%, 15.13% and 13.3% respectively. These rates fell by 106 beeps, 23 beeps and 28 beeps compared to the first auction of the month. So on the 25th of September, there was also a treasury bill, a bond auction, which raised 220 billion, out of which 135 billion was raised with a 26 bond at a weighted average of 15.64%, and the remaining 85 billion was raised with a 2028 bond at a weighted average of 14.52%. So the auction yields for the 26 bond went up by 50 beeps, and for the 2028 they remained at the same level compared to the secondary market. So the yields went for the 2026 bond was up mainly due to the high supply at the auction. In overall, the market yields are experiencing downward pressure, and this is mainly due to the completion of the domestic debt restructuring as well as improvement in the total overall macroeconomic sentiment. Furthermore, the rates also reacted to the improvements in the inflation data which came out. So for the month of September, we saw the CCPI reducing to 1.3%, and this is mainly due to the base effect as the rates were very high in September 2022, as well as a considerable reduction in the food and non-food inflation categories. So moving forward, we think that inflation will slightly increase. This is mainly due to improvements in the base in October 2022 and November 2022 onwards. Also in September, we saw that Sri Lanka failed to reach the IMF revenue targets. So according to the Ministry of Finance, we missed it by 100 billion. We're missing by 100 billion rupees, and the revenue target is set at 11.3% compared to 8.3% last year. So despite this, it is unlikely that the 2.9 billion loan program will be derailed. And finally, on September 15, the central bank also came up with the Central Bank Act, which imposed certain restrictions on money printing. Thank you.
Thank you for joining Ask NDB Wealth.